Now, step three, learn to invest. This is the juicy part, right? So a lot of people ask me, well, how much money do I need to retire? Well, there's a lot of different ways. I have a calculator you can download from my website at theachieveher.com or lakishasimmons.com. But one easy way is to take how much money you think you need to live on and multiply that by the number 25. That's what we call a ballpark figure. Is it going to be exact? No, because 30 years from now or 20 years or 10 years from now when you retire, you don't exactly know how much you need, but you can estimate. Okay. So let's say you need $40,000 to live on, and that $40,000 covers your living expenses and everything you need to, eat out, hair, nails, all that good stuff. That's not paying taxes. And that is not, because hopefully your tax burden will be really low at that point when you retire. And again, you're not going to have some of the expenses. So when I stop working full time, I don't have some of the expenses. My gas is not as high. I don't own in very many suits anymore. I don't have to shop for clothes as much. I do my own hair a lot more. I do my own nails a lot more. So maybe don't need as much money as you need right now while you're working and on the go. Now, I do travel more, but I have more time to find better deals, and I travel during the week, and I can get those $59 Southwest tickets that we thought were all gone. I actually just scored some of those. I'm going somewhere in the middle of I'm going to DC for a few days in the middle of the week. So again, at early retirement, there's so many other benefits that you have. So 25 times whatever you think those expenses are. So 25 times $40,000 a year is $1 million. Now, we're going to be millionaires anyway. We're millionaires. I'm a millionaire. You're a millionaire. If you're not there yet, you will be if you do your financial freedom and your due diligence. Okay. So that's not a ton of money. So let me share with you, because I don't want you to just hear my story. I want you to know there are other women who were just like you, and they were hearing this stuff for the first time, and they thought, I don't know. There are other women who have done it and are doing it. So Jamie, she had no clue how to do any of this. She was starting from scratch. And then she learned about her FIRE number, which is that 25 times your living expenses, and how long it would actually take her to reach that number with an investment plan. So why do I tell you that? Because once you know what you need, you can put a plan together to actually reach that. So now you can say, if you hadn't been investing in a Roth IRA or 401k, you can say, well, once I get started, then I can start to estimate what the capital gains might be, how much could my seed actually grow, and it will actually boost your confidence. And you can say, you know what, let me find more money to invest. You know what, I'm going to cook at home a little bit more so that I can invest a little bit more. Or you know what, I'm not actually using that Prime membership as much, or I'm not using XYZ or as much. I'm going to cut that off and take that $25 and go buy 2 shares of the total stock market or S&P 500 index fund and invest. So again, it's a mind shift. So this is gold. And if you've never seen this before, let me go ahead and explain it to you. So this is a chart of the total returns. And when I say returns, that includes dividends and capital gains from the S&P 500. So the S&P 500 is an index of 500 of the United States' biggest and best companies, the most profitable companies that you know and love, you've heard of: Apple, Google, Coca-Cola, these companies that you cannot easily identify. All right. Companies you know and love all around you. They're in this S&P 500. So in the S&P 500, every year, as these companies do well, as they create new products, Apple creates a new iPad, a new iPhone, people go out and buy it. They love it. People switch from Android to Apple. The value of that Apple stock increases. That's what we call a capital gain, because the value is now more. Same thing with Amazon. As Amazon creates, and Amazon has a pharmacy now. So now you can get all your prescriptions filled through Amazon for cheaper than Walgreens, right? By the way, that was actually a good segue because let's see, Amazon is replacing Walgreens in the Dow Jones. Yeah, so Walgreens is out now and Amazon is in. That news actually, I just read that a couple of days ago. So Amazon is now even replacing Walgreens in the Dow Jones. That's a big deal. Okay, it's a big deal. So anyway, back to this. So as those companies are increasing, because again, Amazon now has a pharmacy, people are saying it's much cheaper. I'll just fulfill my subscriptions through Amazon. Amazon is making more money. As they make more money, they now can give back dividends. They're going to give you a portion of that money back in terms of dividends, and the value increases. So if the stock was $50, they, move Walgreens out the way, and now they have this pharmacy. They have all of these services now besides just a movie studio that they make their own movies. Of course, they do delivery. They can bring your groceries. As they keep creating these new lines of business, that is the company making more money and growing, and so does their stock. So the stock might have been $50, and now the stock is 60, 70, 80, 100. As it increases, that is more, that's what we call capital gains. That's what we call dividends. That is money that you will see your account grow. Does that make sense? So when you see the numbers here on the right, so for 2023, the S&P 500, again, this is a basket of those top 500 companies. What was the increase or decrease in the value of those stocks? For 2023, 24%. These are percentages. 24%. Somebody say 24%. I want you to feel it. 24%. Exactly. That's significant. All right. 2022 was a down year. 18%. Somebody say 18%. Right. But look at the year before, 2021, 28%. Now, this is whatever the amount you had was, increase it or decrease it by the number in this right-hand column. Okay. Now, I accumulated $750K in 4 years. That was between 2017 and 2021. So if we look at between 2017 and 2021, 2017 was 21%. So remember, I sold my house and moved in an apartment. I took the money, the proceeds was about $30,000, what I made on the house, and I put it in the stock market at the beginning of the year. By the end of the year, that had grown almost 22%. Let me see. Let me just calculate this. So that $30,000 by the end of the year, I had made $6,600. So it was almost $37,000 by the end of that year. In 2018, the stock market was down about 4.5%. So it took a little bit of that back. But then look, in 2019, that money went back up more. So let's add, and remember, it compounds. So the 36,600, let's subtract 4.5%. That's $1,600. So we're back to about 35,000. We're still up. And then in 2019, we're going to add 31%. That's almost $11,000. So that $30,000 in 2 years was at 46,000. You see where we're going here? Keep adding another 20%, another 30%. And that was just the money from the house. Okay. That wasn't the money that I was also adding in while I was working all that time. And that's significant. So can you imagine how motivating that is to put money in and to see it grow? And then in 2022, We had a down year. We were down 18%. It happens. So look at this chart from 2008 to 2023 and analyze that. So again, every year is going to change, but over time, in the past, it has gained. And we would hope that in the future, over time, I'm not a day trader. I'm not trading Bitcoin and crypto. I'm not saying any of that's bad. That's not what I have done. I have done the traditional long-term investing. How does this sound? Somebody give me some feedback. Is it still scary?
It's not scary to me, but I've just always thought of, when I've heard of stock, I've just always thought of like a risk. So I never really understood or got the proper education on it. So I've always just thought it was just like a risk of you putting your money into something and then like taking a gamble almost. And then one minute you may have money and then one minute your money may be gone. I never thought that it was like a long-term investment. So I think it's definitely worth what I've learned so far is it being a long-term investment of just putting money there and just watching it accumulate and do what it do and still, pretty much working and adding when you can. Um yeah, I think
Yes.
worth the investment.
Yes. Thank you for sharing that, because that's why I started earlier with, are you afraid? Because yes, we've been taught, oh, it's risky, it's a gamble. But everything you do in life is a risk and a gamble. You get in your car and you get on the highway, that's a risk and a gamble, right? You going to work every day, it's a risk. People get laid off every day. People lose their jobs every day. That's a risk and a gamble. And you're right, putting your money into a company like Amazon, Google, whoever, Tesla, it's a risk and a gamble, because what if it closes? So one thing that I have done to reduce my risk with investing is sticking with something called an index fund or a mutual fund. And the reason why I do that, I don't pick individual stocks. I don't just go out and say, you know what, in my crystal ball of a mind, I think that Apple is going to be the big winner this year, and I'm going to put all of my money in Apple. Well, I still believe that Apple is going to do well, because the past has shown Apple to do well. And it seems like it's a really stable company when you look at the financials. However, I don't want to put all of my eggs in one basket. If I put my money in something called the S&P 500, where I've got 500 companies, and this is a kind of, think of it like a pinata, right? Inside the pinata, there's lots of different pieces of candy. That's similar to something called the S&P 500 index fund, or you can do the Dow Jones index fund, where you're not investing in one company only and everything rides on that one company doing well or not. And when I first started, especially during COVID, so if you look at 2020, and I know that was a terrible year for us as a society, the stock market was still up 18%. So while many people were taking their money and running from the stock market, I didn't take any money out. Like a crazy lady, I actually put money in, because, Jameek, I was not ever investing money that I needed to pay my rent. Well, by that time I had bought a new house. I bought a new house in 2020, but I wasn't using money that I needed to live on this year or next year. I wasn't using my emergency fund. I had a fully stocked emergency fund. I had plenty of money in my savings that I built up. And so the money that I was investing, I knew I was investing for at least 5 to 10 years. I wasn't investing it to need it back by the end of the year. I would never do that. I've looked at the statistics and how this works, and I know that for me, it's a long-term game. So I don't pick individual stocks. If I pick the S&P 500's got 500 stocks in there, then I'm okay with that. During the pandemic, everybody was buying Pelotons. Does anybody remember that? Everybody wanted Pelotons. And we bought a Peloton. Well, you can rent it or you can get it on an installment plan. So we did that. And so I bought some Peloton stock thinking, oh yeah, this is just going to be great. Well, guess what? Soon as everybody thought the pandemic was over, and as soon as that, soon as everybody was getting the COVID shot, guess what? The stock went like this. Now, I never went to zero. I mean, there's not a whole lot of times in history a company has gone to zero, but it never recovered back to pre where it was during the pandemic when everybody was buying them. And so I lost some money on those stocks. And from that point on, I said, I'm not going to buy trend stocks. I'm not going to buy stock because, oh, it's the pandemic and the Peloton is in it, so I'm going to get it. Because then I have to time it. I have to time the right time to get out. I don't want to do that. So I'm going to not be so risky. I'm going to get into the S&P 500. Everybody's looking at this screen here, and you can see from 2008 to 2023 what the returns were. And I like this risk better than trying to pick and choose a stock. Okay. So now that you're kind of understanding how it works a little bit, and you want to be happy, healthy, and wealthy, and I want you to imagine what it would feel like to have your fully funded emergency fund, which I mean, at least 5,000, get yourself there before you invest. And you may want more than that in there. I always say, how much do you need to have in your bank that's nearby that you can get to quickly to make you feel comfortable? Some people say, oh, it needs to be 3 months. Oh, it needs to be 6 months. Oh, a year. What do you need? Think about you and what would make you feel comfortable. And also, I want you to think, how would it feel to have some breathing room in your paycheck? If you feel like everything is so tight, how would it feel to have money just flowing every month on autopilot into your retirement account? How would that feel to you? This is the mindset I want you to get into. Okay. What if you were seeing your money? Oh, I have on the same shirt that is in this picture. But how would it feel to see your money compounding year after year? Feel good about your finances. Start to be able to put money up in your budget for travel. I do that every month. I have a travel line item that I put money into so that when I'm ready to go somewhere, I already have some money put up. That's important to me. I love traveling the world. I just got back from Thailand. Well, actually, that was a couple of months ago. I just got back from a cruise. I took a solo cruise. The cruise was only $528 for 4 nights. Again, you can find deals on things like this. My Thailand trip, that was a bucket list trip, and I paid on it every month for a year to go on it. So these are the things I want you to experience. You just have to put the plan together and commit to make the sacrifice to get there. Okay. So will you get there? I hope so. And so this is how I help women, help them cut their budget, help them learn and get comfortable with investing so that they can get to what feels good for them in terms of financial freedom. I want you to stop trying to have to decide between buying things that's a few dollars apart. I remember I used to do that all the time. Well, this one is, $30 and this one is 33. And well, let me read the reviews. And this one seems better, but do I want to spend the extra $3? It's like, I want you to get to a place where you're comfortable with your money. You know how much you have to spend. You can feel good about knowing you have money going into your retirement accounts that over time is going to help you get to whether you want to retire in 10 years, 20 years, or 30 years, if you're just starting, whatever it is, I want you to get to that place. Okay. So that is my presentation for tonight. If you want to sign up for the Roth workshop, please do that. If you want to get into the Wealthy Achiever program, you can find all that information on my website. And I want to give a coupon code for those who are listening. You stay to the end, you watch to the end, to take 10% off anything that you really feel led and compelled to do. And that code is LOYAL, LOYAL, to take 10% off. And I'm happy to take any questions, something that was unclear that you want me to go over again, or you just want to have a general discussion about it. I'd love to hear those questions.